very good morning. You're watching a new episode of Melt. I'm Ritvika Gupta, and on behalf of Team Melt, here's wishing all our viewers a very happy new year. As we welcome 2021, we try and answer some of the most pertinent questions. Will 2021 see a return to marketing as normal? What does the new year hold for the global advertising and marketing industry? Today, Anant Rangaswami, editor of Melt, will be in conversation with Sir Martin Sorrell, founder and executive chairman at S4 Capital, to understand what the industry can expect in the new year. Let's get ready to melt with Sir Martin Sorrell.
Hello, Sir Martin.
Hello, Anant. Happy New Year.
And a Happy New Year to you, wherever you are in South America. So where are you?
I'm in Uruguay, actually, Anant. Uruguay, which even the Financial Times has just woken up to the fact that Uruguay is a tech center. They've had, I think, their first or second unicorn here in South America. And Montevideo has always been, because it has a tax-free zone, it's always stimulated Globant. You may remember Globant, a very good tech company, was founded in Buenos Aires. It moved its operations, its software operations, to Montevideo. So that's become a little bit of a tech hub, not unlike we've seen in Buenos Aires, although obviously Argentina is going through some difficulties at the moment.
Right. So let's cut to the chase and say, what does 2021 hold for all of us in advertising, media, and marketing?
Bullish year, Anand. The year of recovery from a really dreadful 2020 for all sorts of reasons, but primarily because of that scourge, that virus, which has brought us all down. Not equally. It's affected everybody, but unequally. The rich and well-resourced have managed to cope with it far better than the poor and under-resourced, and that applies within nations and between nations. So it's going to be very, very interesting to see, in the context of the recovery, which countries win and which companies lose, at least relatively. And I think that will be one of the things we see. But generally, I'm very bullish on 2021, particularly when the vaccines start to kick in, probably in the second quarter of 2021. So I'm very bullish on that rebound. We have Tokyo 21 in whichever form it comes, and we'll have Euro 21 again in whichever form it comes, however full-throated both those tournaments and the Olympics will be. But with that as the background, the macro background, from a GDP point of view, the world shrank probably in 2020 by about 4, 5, or 6%. In 2021, it will expand by 4, 5, or 6%. So that square root, that reverse square root sign that you and I have discussed before, sharp downturn, sharp recovery, maybe not immediately to the levels that we saw before, I think is the most appropriate description. It'll take 2022 for the advertising industry to recover to its previous levels. That's the traditionally dominated advertising industry, the network-dominated advertising industry. The digital industry that S4 is a part of will recover far faster. Well, it's sailed through 2020 and the downturn, not serenely. We budgeted 30% like-for-like growth, and the outturn will be, according to analysts, around 15 to 20% for 2020. So we haven't sailed through it unscathed, but we certainly have gone through it far better than the traditional advertising and marketing services model. So I think 2021 will be a year of recovery, and I'm bullish also on 2022. I worry a bit beyond that as to what will happen, whether we'll see inflation and an increase in interest rates, obviously, which will turn stock markets and maybe industrial recovery and service company recovery. But I think for 21 and 22, it's set very fair indeed.
And what do you think of the impact of the US elections?
Well, you have to wait and see what happens on January the 5th in Georgia.
Yeah.
They see the results of those Senate seats. If it's a blue wave, if President-elect Biden wins those seats, he probably has a little bit more wiggle room, and it's a little bit more of a blue wave, and therefore we'll see more stimulus. That's on the more positive side, I guess, economically, at least in the short to medium term. However, there's more likelihood of an increase in taxes, capital gains taxes, maybe even wealth taxes. We're seeing, for example, in California, the increase in state taxes and threatened taxes in New York start to move companies. We've seen several of the big tech companies like Oracle and others move, or say they were going to move. Tesla is another one, move to Texas out of California. So we're going to start seeing that. If on the other hand, the Democrats don't win those seats, or win one of them, I guess, it'll be a more moderate stimulus on the one hand. So less good news in the short term for the economy. On the other hand, the pressure on tax increases will probably be less, and the regime will be more balanced, if I can put it like that, from a tax point of view. But generally, we saw President Trump initially oppose the COVID relief programs and the government budget programs, but he signed them in haste. Finally, on the last weekend of 2020. So what we're seeing, I guess, is stimulative for the US market. And we're very bullish on the US market. We're bullish on the US, we're bullish on South America, we're bullish on Asia Pacific, particularly China and India, and we're bullish on Africa and the Middle East. Western Europe is probably going to be a little bit more mixed. Obviously, the UK has a psychological lift from the Brexit so-called deal. Things are not ironed out completely, but a lot of the uncertainty has been removed, the uncertainty of no deal, which would have been pretty horrendous, I think. Not materially, because I think the deal that's been done is so skinny, so thin, that the differences between no deal and the deal that's been done are small. However, psychologically, I think it's important. And it means that the UK, in my view, will have to explore what we call the Singapore on steroids, or Singapore on Thames route, i.e. A radical shift in our trade patterns to North and South America, to Asia Pacific, and to Africa and the Middle East, and maybe away a little bit from Western Europe. And secondly, there will have to be heavy investment. And this is where the rub is. I mean, COVID has made the government invest substantial amounts of money in protecting the population and businesses, quite rightly. But it's also put great strain on the finances. So the question is, do we have enough as we pursue this route, on the edge of Europe, the island off the European coast? As we pursue this route, we will have to revitalize and modernize our economy. We'll have to re-educate, reskill, have a lot of more mobility, hardware and software, infrastructure investment. It's not just about ports and railways and airports. It's about 5G, AI, and all the attendant technology. Now, will we have the resources necessary to be able to do that? And I think inevitably what it means for the UK economy is a dip in the short term. And if it was going to grow at sort of that level, we dip below that level in the short term, and probably will take something like 5 to 10 years to go above that original line. I think in the longer run, there's a lot of opportunity for the UK, but there's going to be a lot of angst in the meantime. And you already see the UK signed a free trade deal with Turkey. Prime Minister Johnson is visiting Prime Minister Modi, which is good news, I think, in January, and I hope it will lead to an even closer relationship between the UK and India. And obviously with our operation in India, we're hopeful of even more expansion there. We're not affected by Brexit. Our operation, we now have 3,400 people at S4 in 31 countries now, including Germany. We're hiring in India, which is unlike what we're seeing in the advertising and marketing services industry in India, where I hear there have been significant redundancies. but we're investing in our business there in Mumbai and Bangalore and Delhi. And in fact, we're expanding quite significantly in Delhi. And I think we'll be up to about 450, 500 people in India in very short order. So we're very bullish on those prospects. And I'm very hopeful that Prime Minister Johnson will work out one or two advantages for Indian-British cooperation in the future.
A few days ago, I wrote a piece saying 2021 is going to be about marketers demanding faster, better, cheaper. That's what I wrote. And has it changed post-COVID?
I don't want to over-flatter you, Anant, but that description is a fair description. It certainly fits in with our, we have 4 principles around our constitution. As our constitution is of S4. The first is purely digital. The second is that holy trinity of data and content and programmatic or performance. The third is faster, better, cheaper, or speed, quality, value. And the fourth is a unitary structure. I think clients are looking for agility. I mean, agility is the key corporate attribute that all marketeers, all CEOs for that matter, CFOs, CIOs, CTOs want. Better, in our terms, is a better understanding of the digital ecosystem. India has Reliance and Jio and Mukesh Ambani's amazing initiatives there, being backed now by Google and Amazon and Facebook and others. And of course, the decision by the Indian government to ban Chinese applications has probably heightened the importance of that initiative around Reliance, and the initiatives that are being taken by Airtel, by Sunil Mittal at Airtel, and by Vodafone and others. So understanding the digital economy in our terms is what better means. And cheaper means efficiency. It doesn't mean ZBB anymore, zero-based budgeting. I think that's been discredited to a great extent, because what it tended to do was destroy or reduce investments in branding and innovation. And both those areas are exceedingly important. So agility, taking back control. And then I think the final point is the importance of first-party data. Clients really have become increasingly concerned about the walls in the walled gardens around the platforms like Google and Facebook and Amazon and Tencent and Alibaba and TikTok. It's interesting that the government concerns around the tech platforms are not confined to the Western world. You've seen what the Chinese government has done in relation to Alibaba and Tencent and others. And there is concern about, I think to some extent, I must say misplaced concern, because I think the platforms are behaving increasingly in an increasingly responsible way, both in terms of understanding that they are media as well as tech companies, and understanding the issues around brand safety, interference in elections, and privacy. So I think as these companies have gone beyond $1 trillion in market cap, Facebook's probably the only one that is below that, but it's 700 billion or whatever it is. They've started to exercise greater restraint, hired more people. Facebook's hired 35,000 people to monitor editorial content. Google and Twitter have modified their political advertising. Even Facebook did in front of the election. So times have changed, and they are behaving more responsibly. I guess when you're dragged before Congress every month or so, that has the effect of doing that. But sometimes regulation can be misplaced. But that it is what it is. And first-party data, that is data owned by clients, data that they have access to, that they have consumer consent to, and the consumers fully understand what they're letting themselves in for when they consent to use of their data. Those are very important qualifications. That data is really become more and more important. And we saw a huge surge in our business in Q4 of last year on the data and digital side. And I think that was driven in part by small businesses continuing to use the platforms. And people's got to remember, the platforms, 60 to 70% of their advertising revenues come from small businesses. So politically, actually, it's really important for these small businesses to prosper. And these small businesses will prosper only when, not only, but part of it will be based on their access to the platforms. So that first party data is a really important part of what we're seeing. But the description that you use for 2021 of faster, better, cheaper, I think is a good one. It embodies all the things I think that marketeers are increasingly looking for.
After this macro view, if we come to India and say, what do you think is going to happen in India in 2021?
I always have been a raging bull about India, and I continue to be. I think Prime Minister Modi has done a tremendous job of positioning India on the world stage. And, you know, you see the projections that China by 2028 will be the largest economy in the world. Yeah, if you look at it, you look at it on a purchasing power basis, it might even be, so I saw some estimates even now, it's got to that, if you're looking at a purchasing power parity basis. But in terms of size, it probably will eclipse the USA as we get to the end of this decade, a decade which is so important for S4. We think this will be our decade, and obviously it will be the decade of China in a way too. And India will be coming up fast behind China as one of the most dominant economies in the world. Certainly from a population basis, it will surpass China in a few years. And I think inevitably India will become even more and more important on a world stage. It will become one of the leading economies in the world, rivaling the USA and China in due course. So for us, it's really important. And I think in a world context, it will become important. In 2021, I see India rebounding.
When you were at WPP, you took an inordinate interest in Kantar and in measurement at TAM.
Right.
So you've been keeping abreast of what's happening at BARC over here. So I just want your initial reactions to it. I know you wouldn't be able to go too much in depth, but your headline impressions of what is happening here.
Well, I'm amazed. I mean, I was always, look, I have to be, let me be blunt about it. The TAM, the television audience measurement business, was a wonderful business. We had a WPP or a Kantar, a superb business, along with Nielsen. We and GfK, I think we were the three big providers. We had a wonderful business, not in the US, that's where Nielsen dominated, but in South America, in the UK, in Western Europe, in Asia, in China, in India. Never had really any significant difficulties in China or India, except in the area of television audience measurement. I mean, in China, we had a joint venture with CCTV, and I remember it was 60-40 in Kantar's favor, and then CCTV pushed for 51%, which eventually was negotiated. In India, we had that terrible period of time when Kantar and Nielsen were displaced by BARC around, I asked you to check it out for me, the date, I think it was 2012, 2013. And the reason for that was concern in Parliament with the government that the TAM measurement system was not a fair system and was prone to, let's say, exaggeration or distortion. I'm amazed by what has happened. I mean, I don't know the inside out story about what has happened at BARC and what has happened with Republic TV and the ratings and Times Now, etc. And you know what I've read in the press. But I must say I'm amazed. I'm stupefied actually that this has happened or seems to have happened yet again. If the allegations are true, I hear arrests have been made and prosecutions will come from the Mumbai police. And I've read the response from Republic TV, their 20-point response. But to be honest with you, and I was very disappointed by what happened in 2012, 2013. I thought it was unfair to the people at Kantar in India that it was suggested that they had not behaved in the most in the best way. And I find it amazing that this seems to have happened under Bart's leadership. It was put in place to try and prevent this, and all that seems to have happened, again, if the allegations are true, is that the system has been breached. So we'll see, but disappointment, and as I say, I'm stupefied by it.
Right. And then to close, I want to ask you, 2021 for the networks. What do you think will happen to each network, including your erstwhile network in 2021?
Well, I think 2021 has to be better. I mean, the big issue is whether it's a dead cat bounce.
Right.
If you can't get your revenues to grow in Q2 of 2021 when you were down by 10 or 15% in Q2 of 2020, you never will. So inevitably, the comparisons will look better. Not so much in Q1, but in Q2, all the networks, all of them will look better. Now, whether that is a meaningful improvement or whether, as I say, it's a dead cat bounce is another question. What they can't get away from is the fact that they find 60% or 70% of their revenues from traditional media. And traditional media are under even greater pressure as a result of COVID and as we go into 2021. I mean, the thing that we will see in 2021 is what you and I have talked about before incessantly, is that COVID has accelerated digital transformation at the consumer level, at a media level, and at an enterprise level. And that will put the networks under increasing pressure. Omnicom seems to be the one that has sort of strategically moved the least. I would say Publicis is one that makes the loudest noise about the strategy and the strategic shifts it's made, but doesn't seem to move the needle. I mean, seems to have organic revenue growth performance, which is, if not the worst, one of the worst in the industry. The share price performance of WPP, Publicis, and Dentsu, they're all down over the last 2 years by about 50%, whereas Omnicom and IPG's share price performance has probably been slightly better, if that's a relative statement, down by only about 20% or a third. But none of them have done well, and all of them face the same challenge. And until I think their only salvation for all of them is a breakup. I mean, Vivendi absorbed Havas. Havas has really disappeared from view totally now. And that maybe somebody will come along and swallow up one of these networks and they'll disappear from view. I think that's highly unlikely. I mean, I do hear the drumbeat of the networks looking at, I know of one network that is looking at going private. Maybe more news about that will come as we go into 2021, but I hear a little bit of noise about that. Private equity has huge amounts of money. I always thought it was $1 trillion of dry equity, which they could leverage up 1, 2, 3, or 4 times. Look, I think, Anant, whether you're talking about Omnicom, which has not responded strategically as yet, to Publicis, probably the other end of the spectrum, Dentsu, WPP, IPG, perhaps in the middle, maybe IPG a little bit more towards the Publicis spectrum. But Publicis has to work out what it's going to do with Epsilon. IPG has to work out what it's going to do with Axiom. Dentsu has the best data asset, Merkle. but seems to be in a state of total disarray at the moment. I mean, you know what's happening to Dentsu in India. We've seen what's happened to it in Asia, in Australia, and China. It seems to be in a very poor state at this particular point in time. So net, the numbers will look better next year, but the fundamental problem of dealing with what are essentially traditional analog assets remains. And until they disgorge their analog assets through a breakup, or until they break themselves up or go private, I see little salvation for them. Other than, I mean, most of the people running these businesses have no financial interest in them. They depend for their livelihood and their family's livelihood on their jobs. So turkeys don't vote for Christmas. So the last thing they'll do is want to break the business up. It gives them no benefit whatsoever other than losing their salaries and their jobs. So there's great inertia there. Unless there's an outside force like an activist or private equity that comes in to break them up more aggressively.
Finally, when do we see you in India? Are you now that you've gone out of the UK and gone to Uruguay? India's a lot closer than that. So are you likely to make it?
I will come as soon as I possibly can.
Have you taken Have you taken a vaccine? Have you taken your vaccine yet?
No, I haven't. I am in the second group.
Right.
I'm not the over 80s.
Right.
Middle of January would be when I would be vaccinated. So you can expect to see me in India as soon as I've been vaccinated.
Fantastic. Cheers and have a terrific 2020.
Stay safe and stay well. And to all my friends at WPP and S4 in India, have a wonderful New Year.
And that was Sir Martin Sorrell sharing a positive outlook for the global economy and advertising in 2021. You can watch the unedited version of the same interview on readytomelt.com. On that note, it's a wrap on this episode of Melt. Don't forget to follow us on social media. Our handle is Ready to Melt, and stay connected with our daily Melt update on our website readytomelt.com. I'll see you next week, same time, same place. Goodbye.